Hype, hope, excitement, cheap, promises. All reasons why I think my 6 stock picks are overrated. In other words, in my opinion, of course, these stocks for one reason or another have become popular, but I believe most investors are buying blindly. They are following someone that says buy, so they buy, with zero research of their own. There is really no understanding of the business or the financials of these companies. There's what's called FOMO that people do, or they just buy because of fear of missing out. They cannot separate the business from an investment, two very different things. Just because it's a good company doesn't mean it's a good investment. Maybe it promotes health, but has declining revenue. So we will quickly go through my list of 6 overrated stocks, and we're gonna start with number 6 and work our way to number 1. So overrated stock pick number 6, Zoom. Yes, this company provides video communications. To me, it's easily replicated with a small moat and a small ecosystem compared to its rivals. For example, Teams is a Microsoft product, and Microsoft dominates the business environment. Microsoft can bundle Teams into its broad array of solutions and products. You have Google Meet, which is also popular, especially in other countries right now, where it has a vast ecosystem, and like Microsoft, you can bet they can utilize that to their advantage. I bought a TV and it's integrated with Google, and you just can't get away from it. Google has Google Home, Google Maps, Google Search, more than you think. You also have Slack, Skype, WebEx, and many small players. In fact, if we look at the market share between 2021 and 2022, and this also adds in 2020, you can see the market share change per year. The percentage below is from 2022 versus 2021. So Zoom went down 4.5%, Google Meet is up 10.3%, Microsoft is down a little bit at 3.2%, Skype is virtually unchanged, but the very right is the market share percentages. So yes, Zoom is 42.7%, where Teams is 10.9%, but there's nothing that says that won't change in the future, and I will talk about that more in a minute. But here's some other players. You have Slack, WebEx, Google Hangouts, GoToMeeting. So Zoom is popular and does have the majority of market share in a lot of countries. But I think with big players like Microsoft and Google, it's only a matter of time before Zoom falls out of the top spot, and these others offer a lot more than just video communications. In fact, Teams is mainly used with my meetings, both internal and external. I'd like to hear what you are seeing on your end. Do you mainly use Teams or Zoom with your company, with your job? So let's look at its stock facts. So we will see here that it has no price per earnings trailing 12 months, which means it could be negative. The last 5 years is a staggering 513%. The price per operating cash flow is very high at 211%. Now its 5-year cash flow growth is 182%. But what I want you to pay attention with all 6 picks is the 5-year numbers might be high, but the trailing 12 months is shrinking, which gives you that kind of insight as to why I think these are overrated, because now they're starting to go in this downtrend. So revenue over the trailing 12 months is a dismal 4.91%. Of course, over the last 5 years, if you take that average, it's 96.1. So you see that shrinking when it comes to the last year versus 5 years. Gross margin is actually good, but return on equity is non-existent. And the debt, I would say, is one of the highlights of this company, but it does not pay a dividend. It is not returning any value to shareholders in that respect. So this is my overrated stock pick number 6. Now my overrated stock pick number 5 is Coinbase. This is a cryptocurrency transaction company. I am not bullish on crypto. It has not revolutionized the financial landscape. It has not replaced the US currency, and I do not think it will in the future. It has, however, revealed a lot of fraud and mistrust. It's not a productive or value-producing asset. It does not produce a product or service. Its price is determined on what the community decides its value should be based on supply and demand. Its value is dependent on popularity, not from fundamentals and financials like revenue, cash flow, a moat, etc. There is no way to determine the intrinsic value, aka a measurement of what the asset is worth. Therefore, I just don't think it will ever be widely adopted. So with all the big hopes around crypto, nothing is really developed, and therefore I don't see a company like Coinbase being successful, as it's mainly based on hopes rather than performance, financial and other obtainable measurements. So let's look at its stock facts. We will see there's no price per earnings or price per operating cash flow, which means those are probably negative. Now the last 5 years, the cash flow is 183.43, so you could probably see how that's deteriorated massively. Negative revenue change over the last 12 months of negative 61%, with the last 5 years was a positive 43, so you can see the trend going significantly downward into the negative. Negative gross margin, negative return on equity. It does have low debt to assets, but a higher debt to equity, and again, does not pay a dividend. Warren Buffett calls it crypto crap. So this is my overrated stock pick number 5. Now my overrated stock pick number 4 is Virgin Galactic Holdings. Space is epic. A company that can take consumers to space is cool. An investment in a company like this is not cool. It's risky and limited. The cost benefit is horrible. Imagine the cost to launch a few people to space. In fact, it cost Virgin Galactic over $12 million per launch. Imagine the cost of each new spaceship. It's not a product or service that can be easily expanded. It costs a consumer, a customer, $450,000 to go to space with Virgin Galactic. They have a very limited customer pool because of that. There is also the risk of one catastrophic event that could hinder this company's future. They would probably lose all their customers at that point. So it's a cool idea, but as an investment, it just does not make sense. If we look at their stock facts, we will see no price per earnings or cash or price per operating cash flow metric numbers, which means they're probably negative. The last 5 years cash flow growth is 29.88. But look, you have a negative trailing 12 months revenue of negative 33.95, negative 5-year revenue of negative 4%, a very low gross margin, a very negative return on equity, and actually pretty high debt. And again, not a dividend payer. So this is my overrated stock pick number 4. Now my overrated stock pick number 3 is actually an ETF, and that's the ARK Innovation ETF. This is disruptive innovation focused, but I think it's more like disruptive to your gains. It has high allocations, which are risky. Tesla makes up 12.2% of this ETF, Roku makes up 8%, and Zoom makes up 7%. The top 10 make up 63.22% of this fund in total assets versus a better ETF, in my opinion, like SCHD, which its top 10 makes up 41.86%. Now, ARK is actively managed, and so it's extremely expensive at 0.75% expense ratio. That's ridiculous versus SCHD's 0.06%. Or you can look at it as ARK's expense ratio is 1,250% higher than SCHD. And long term, that will really eat at your gains if you make any gains with ARK. This is my overrated stock ETF pick number 3. Now my overrated stock pick number 2 is NVIDIA. Yes, I know I'm going to get some pushback for this, but AI is the big buzz, the big hype currently. AI is real and important and will play a big role in the future, but right now it is hyped up, and this usually signals the wrong time to buy as they have ballooned in overvalued range. AI still has a long runway to become something that is huge and integrated into all our lives outside of just a search engine tool. Each year there is some new hype topic that sends investors into a frenzy, but it usually does not work out too well. The metaverse, for example, was last year's, and I bought into that. Then you have crypto. These were hyped up, and look how far they have fallen. Granted, I think AI is legit. Hype will die down. It always does. I just think all AI popular stocks ran up too much, and people are forgetting with NVIDIA there are many competitors. You have Microsoft, Google, Intel, Amazon, AMD, and many more. Investors are acting like NVIDIA is king and the only AI play for the future. But be careful, as these other companies are not ones to sleep on and they cannot be ignored. NVIDIA's current valuation is almost impossible to justify currently and is super risky at this point to buy. If we look at their stock facts, their trailing 12 months price per earnings is 213%. Over the last 5 years, it was 62.9, so it's ballooned up. Same with its price per operating cash flow. It's a staggering 152.93%, even though over the last 5 years, it's only grown 12.74%. The revenue change is actually negative trailing 12 months at negative 12.4. The revenue growth over the last 5 years is 22.66. Gross margins are good, but return on equity is lower. And they do have some debt. It's not staggering, but they have some. And this is kind of funny. They do pay a dividend, one of the only ones I believe on this list, but it's a 0.04% yield, and it only makes up 8% of the payout ratio, and it hasn't grown in the last year, and it's grown only 1.3% over the last 5 years. So really, this is my overrated stock pick number 2. I just think it's all about the hype right now, and that will die down. So for my overrated stock pick number 1, I will definitely get some pushback here. That is Tesla. It's just a car company. Yes, they are trying to expand in other areas, but in 2022, 88% of their revenue came from automotive revenues, and it accounted for 96% of gross profits. That is a car company. They have a lot to prove still, as investors have baked in so much into this stock. You are betting on Tesla becoming a Microsoft, an Apple, a Google, where you have a huge moat and ecosystem. They are just not there yet. There is still a lot yet to be proven, and that is not the best way to invest, in my opinion. Plus, there is increasing competition and market share deterioration with Tesla. If we look at their stock facts, we will see they do have a high PE, trailing 12 months, of 76. They don't have one over the last 5 years. They just started making money recently, which is good. Now their price, property, and cash flow is a little high at 50.3. Now they have an impressive 5 years of cash flow growth of 118%. But I'd like to see that revenue a little higher. It's healthy, I'd say, though, still at 38.34%, and over the last 5 years, 47.27%. So a little bit of a slowdown. Gross margins are a little low, same as return on equity for me at the 27 range. They do have low debt, which I give them kudos for. They do not pay a dividend, though. So I think Tesla can possibly grow into its valuation and expectations, but I'm not willing to invest into that maybe happening. I want to see it happening through actual metrics and measurements, such as automotive revenue being maybe less than 60%, still growing though, but also having other lines of revenue that are growing and making up the other 40%. So this is my overrated stock pick number 1. There you have it, my 6 overrated stocks. I don't expect everyone to agree, and I encourage your opinions on these and what other stocks you deem overrated currently. I'm not saying any of these will not be successful in the future or will be total failures, but from what I covered, I believe they are currently overrated and not the best investment choices, as they are risky, hyped up, and or overvalued, which means there's a decent chance of a loss of money. Thank you guys for joining me today. Be sure to subscribe, as I will have plenty of content coming up. And this is an investing family. We're all trying to become wealthy together, and I'm just really enjoying all my subscribers and the comments that I'm getting on every video. So again, thank you. Have a great day.